The S&P had a massive gap up today, and in this video, I'm going to share 3 reasons why I'm not too excited about this gap up and why I think the bearish side still offers a better risk to reward. I'll start with the obvious, which is resistance, then move on to talking about price channels, then we'll visit seasonality patterns and trends, bring all of that together to summarize why I think the bearish trade here has a little bit more room or better risk to reward opportunity than looking here for the long side. Now let's start first with the obvious resistance. If I start with the clean chart, this should be fairly obvious here. It doesn't take a whole lot, even if you have very little technical knowledge, to be able to recognize that we're now approaching where we would expect to see a little bit of resistance. Previous places where we've made new highs started to chop around. We're entering that zone, so we expect to see chop as we enter inside of this zone. Now, this is a fairly wide zone, 580 up to a little higher than 610, 613. So that gives you a wide region, doesn't help a whole lot in picking a specific price, but helps to give you an idea that you're now inside of key resistance areas. Now, to find that specific price, I think the easiest thing that you can do is extrapolate Fibonacci extension. So previous swings, previous runs up, compare them to the current run up to see what does that look like. So, for example, if we were to take this previous Fib point low and compare it to this high that we made, and now take this low and project it to see what is a similar move, the distance that we made from this low to this high to our current pivot low that we made in this swing low to the swing high, that gives an upside projection of 584.76, and we're currently at 582.99. So now you have a specific price where you're looking at price to at least face specific resistance and maybe have a little bit more sell side activity. Now, right away, knowing that this is where we have our first upside target, this difference, this delta between 583, let's call it, and 584, maybe about $2 or so on the upside for potential room that you might be able to run, for a potential risk on the downside of even a basic gap fill near 566. So I think the downside risk is a little bit more here. So that's number one, resistance. Now, number two, outside of resistance, is the price channel. So far, I don't think there's a very clear, clean price channel that has formed yet. So much of this is going to be guesswork. Now, what I think may be the channel is something like this that ends up forming. This will only make sense after the fact. So we're doing a whole lot of guesswork here. But if we were to try and guess this channel, that's one idea that I have. And then the second channel is more, or a little tighter, I should say, where it's based more off of an idea like this. In all cases, we're more towards the upper end of this channel, or rather in the upper half of this channel compared to the bottom half. So yet another reason why I think the risk to reward getting short here towards the top end of the channel is a better trade than trying to look for a breakout above the channel. Finally, we bring this all together with seasonality. So let me remove all of these drawings that we drew. And now let's just load in our classic seasonal analysis indicator. This is a free indicator, and I have the max available data loaded on so we can get an idea of how has the S&P behaved across a good historical period of time. Now, the reason why I'm not a huge fan of the S&P is all the way up, or rather the S&P at this point, I should say, is up until May. We can see strong seasonality. March, April, May, some solid months. We talked about this when we created our game plan for the S&P 500 early on in the year. Now we're approaching June. June is that first month. You can see this yellow label where our seasonality labels tell us very clearly that we should expect at least a little bit of choppiness inside of June. 50% of the time we close above where we open, so it's about a coin toss of having a green month. And on average, the percentage move for the month of June is negative. So that tells me June, I'm not really looking for a whole lot of follow through here inside of price action. Now comes July, where you see a little bit of a pause. So sure, you might see a little blimp here for 1 month, but then back August and September, we get into that slump with negative overall months. So it's really October onwards where we might be looking at this rally to resume. But up until then, I'm looking for either choppiness, a little bit more sell side activity. And in all of those cases, I think the risk to reward is better skewed on the short side here. Just waiting for the right trigger is what I'm looking for. I'm not in any kind of rush to go long here, and I'm not in any kind of rush to get short. There's a wide zone here, and I know the zone I want to play within. I know the bias I have. I know the overall parameters that I'm looking for. Now I'm just waiting for things like momentum to shift that tells us that, hey, now we're looking at sellers to start to pile in on the bearish side. So there you have it, 3 reasons why I'm not a huge fan of the S&P here in spite of this gap up, the rally, and the news that we have surrounding the market. One more time, a quick recap. We have the obvious resistance. We tied this with not only price action, but also projecting our Fibonacci extensions, where we saw we're heading right up into some previous resistance levels. That was number one. Number two was we're towards the top end of the channel. Whichever way you were to slice and dice it, it felt like we were closer towards the top end of the channel compared to the bottom end of the channel. Again, where you have the risk to reward skewed for the bearish side. And finally, we bring in seasonality, where it feels like all the way up until May is where that bullish activity should stop. And now we enter the summer months all the way up until about September, where we should see a little bit more choppy price action and price action that doesn't have as much bullish direction and strength behind it. I hope you found this video helpful. The seasonal analysis indicator is a free indicator. I'll leave a link to download it for everyone interested in the description box below. Take care, and I'll see you in our next update.